You've done your research, you're confident in a stock, but suddenly the news turns bad. What do? If you're like most investors, you ignore it. You scroll past the negative headlines, you dismiss the analyst downgrade, and you cling to the one positive article you found last week. This isn't a lack of intelligence, it's a hardwired psychological trap called confirmation bias. It's the silent killer of portfolios, forcing you to make bad investments and investing mistakes by only seeing what you want to see. I'm Your Name, a behavioral finance expert, and in this video, I'm going to expose exactly how this bias works, show you the real-world damage it causes, and give you 4 non-negotiable investment strategies on how to fix it and stop losing money. Stick around, this is the most important lesson you'll learn today. Let's start with the formal definition. Confirmation. Bias is the psychological phenomenon where individuals selectively gather, interpret, and remember information that supports their pre-existing beliefs, while ignoring contradictory evidence. Why do we do this? Because it's mentally easier. Being right feels good. Being wrong creates cognitive dissonance, a mental discomfort we instinctively try to avoid. Our brain is wired for comfort, not for optimal investing. In the investment world, this translates to a dangerous pattern. You buy a stock, that's your belief. This stock is a winner. From that moment on, you only read articles that praise the company. You dismiss a negative earnings report as short-term noise, or an analyst downgrade as misinformed. You are actively building an echo chamber around your money, and that is a recipe for bad investments. The first dangerous manifestation is clinging to losers. This is where confirmation bias meets the sunk cost fallacy. You hold on to an underperforming stock far too long because you only focus on the initial positive reasons you bought it, ignoring the mounting evidence of its decline. You justify your past decision instead of making a rational future one. You are literally watching your capital evaporate because you can't admit you were wrong. Second, the echo chamber effect. This leads to a severe lack of diversification. You only follow financial news sources, subreddits, or social media accounts that validate your current holdings. This overconcentration in a single sector or asset class is a massive risk, but your bias tells you it's a brilliant, high-conviction investment strategy. And finally, the overconfidence booster. Confirmation bias leads to an inflated sense of certainty in your investment thesis. When you only consume positive news, you become overconfident, causing you to take on excessive risk, like over-leveraging or making massive concentrated bets. This is how small investing mistakes turn into catastrophic losses. You are so certain you are right that you ignore the very real possibility of a market shift. Let's look at 2 classic examples. Case Study 1, the meme stock phenomenon. This was confirmation bias in its purest, most aggressive form. Investors only shared and consumed highly positive, often speculative, information, while aggressively attacking any dissenting opinion. The narrative became more important than the fundamentals, leading countless people to stop losing money too late. Case Study 2, the permanent bear bull. We all know them. The investor who is so convinced the market is about to crash or about to soar that they interpret every single piece of economic data through that single lens. A good jobs report, the bear says it's the last gasp before the collapse. A bad inflation number, the bull says it's a buying opportunity. They miss genuine shifts in the market cycle because their bias is too strong. These are classic investing mistakes rooted in the refusal to process contradictory information. You've seen how confirmation bias is silently killing your portfolio, forcing you to make bad investments and stop losing money. But how do you fix it? This is the most important part of the video. As a behavioral finance expert, I'm giving you the 4 non-negotiable investment strategies you need to implement right now to overcome this bias. Let's dive into the How to Fix guide for your investing mistakes. Strategy number 1, you must actively seek out disconfirming evidence. This is your behavioral finance strategy to challenge your own beliefs. Don't just search for why stock ticker is a buy. Instead, your search query should be the biggest risk for company name or why stock ticker is a sell. Force yourself to find 3 credible sources that argue against your investment strategy. Strategy number 2, create an investment journal. This is the most powerful tool to stop losing money due to emotion. Document the key metrics, the core thesis, and your predetermined exit criteria. Your journal provides an objective benchmark. It removes the opportunity for confirmation bias to rewrite history, helping you avoid those common investing mistakes. Strategy number 3, diversify your information diet. Confirmation bias thrives on homogeneity. If you are a raging bull, you need to follow a respected bear. This is a core behavioral finance strategy for market resilience. The goal is to ensure your investment strategy is robust enough to withstand intelligent, well-reasoned criticism. Strategy number 4, automate your exit with stop-loss orders. This is the ultimate how to fix for emotional trading. By setting a stop-loss before the stock starts to fall, you are making a rational decision in a calm state. The system forces you to accept the loss and move on, protecting your capital and helping you stop losing money on bad investments. So, let's recap. Confirmation bias is natural, but it is deadly to your wealth. You now know the 4 strategies. Seek disconfirming evidence, keep an investment journal, diversify your information diet, and automate your exit with stop-loss orders. Remember this: the best investors aren't the ones who are always right. They're the ones who are best at admitting when they're wrong. That acceptance is the first step to becoming a truly rational investor. Now, I want to hear from you. What's one stock you held on to too long because of confirmation bias? Share your story in the comments below. Like this video if you found these behavioral finance strategies helpful. Subscribe for more content on how to fix your investing mistakes, and I'll see you in the next video.